Hello and welcome to this week's Fit Finance Sessions with myself, Tom Senegals, and
Tim Webb, hello.
there we go. Bit of satellite delay, but we got there in the end. Tim is normally a bit sharper, but as the gyms are back open, he's a little bit slower this morning. And we're without our illustrious colleague Henry this week. He'll be back next week. But Tim, what's been going on in markets recently? Seems a bit more uncertain out there. But what are your thoughts on it?
Yeah. I think anybody who's watching this and follows the market similarly, I think would agree with me. There's not too much that's really gone on. Generally speaking, it's just been going sideways for a good amount of time. I think really until there's actually a bit of a more or heavy weighted sort of outcome as to the situation. I think that's just going to be the case, i.e. whether or not there is going to be a second wave, or whether or not we can get our grips on the virus, and obviously this new vaccine actually turns out to be the answer, and we come out on top of it, so to speak. Until that point, it's just going to move sideways. I mean that more generally speaking, when this happens, normally gold tends to increase its prices, because generally speaking, people perceive that as an asset-backed security, where in times of uncertainty, it's just flocked to what we know is always held good value. So actually, I think this week it's reached all-time highs. So that sort of says something about market sentiment. I think people are still nervous what's going on. I was just reading on Reuters this morning, from a retail perspective, people people are continuing, or now starting to spend again, almost in the Eurozone at least, almost pre-COVID levels, but actually it's more so online than getting out the front door. And places such as Harrods and sort of the West End in London are actually having a bit of a tough time because people aren't getting out and visiting these sorts of malls. So interesting shift on to be more online than in person. But is that really a surprise in this day and age? I think even pre-COVID that was happening, but it's just more of a catalyst, I think, isn't it? People are just going to be doing it more, on the keyboard these days than in person. But yeah, I think generally speaking, nothing too exciting for us to get our teeth into and have a really big conversation about. It's just going sideways, and until we know more clear which direction we go from here, up, down, in terms of COVID, etc., and the impact, then it's just going to do that, I would say. But yeah, I mean,
it's volatile. Some asset classes are doing better than others, but I think, you discussed about gold, and I think lots of people say, well, should I buy gold? And yes, it's doing very well because it's seen as a flight to safety, a safe haven, as you were sort of describing. But the problem with commodities like that, it can change very quickly. It's very volatile. You only got to look at what happened with the oil price recently. I think clients will have exposure to precious metals in the portfolio, but more so through mining stocks. So if gold price goes up, then miners will do better because they're getting more for what they're doing. But if you hold the actual asset itself, it's quite volatile, and it's quite we don't believe in market timing anyway, but even more so with these very volatile asset classes. At the moment, different things will happen as different data comes through. Everything will come out in the wash, I think. It's just, and some industries might get left behind, but I know you're looking this morning about travel shares. Airlines and travel companies have taken a really big hit this morning as some more restrictions are slapped on. But people will still travel and still fly and still go on holiday in the future. It just might look a little bit differently, and the good companies will survive, the bad companies might not. But equally, that's where active management can help, picking the right companies, either strong ones that will do well or ones that are out of favour and have potential to increase. I think the other thing this week is Europe has finally got some consensus on a deal with the larger Eurozone and issuing debt. And I think we've been saying this in the last few podcasts. Governments won't let the financial system collapse without printing a shed load of money. And that's what they're doing when they're issuing this debt. The government spending requires more issue of government bonds, and that stokes the system. So the bigger worry is inflation going forward. You've seen a drop in markets, but now you've got to hold real assets over time, and European shares have done really well. I think particularly in the US they're a bit concerned, so you're probably seeing a lot of investors in the US looking at Europe with a strong dollar, going that's pretty good, and the euro is pretty strong. So I think Portfolio Metrics did a recent thing about how the market's gone through different sort of stages very quickly, and it seems to be happening like that at the moment because information's very fast. Things kind of move around very quickly, so it is volatile. But I think if you're buying good assets and good companies, it doesn't really matter what's going in the short term. Valuations are down overall. Maybe some tech companies are a bit overvalued, but they generally always are. And I think it's just about staying diversified and just riding out the storm. But the world will still be there. It's just makes it sometimes easier for us to do these podcasts because there's always something different going on every week. But a lot of it's just noise. I think there's still good companies making good stuff out there.
Yeah, indeed. It's definitely a time where the macro information, so the data of the market, is extra sensitive to that at the moment. You know, whatever information is coming out, that's almost, what does that mean long term? Everybody's almost looking at it as, it can have such a long term effect. Whereas, as you say, it is just noise. It's just, it's a case of filtering it out and staying true.
Yeah, and I think people forget it's been very low volatility in markets for such a long period of time up to this. And actually, if you look at the VIX index, which kind of measures volatility, at the peak of the crisis, that was up about 80, then kind of dropped to 40. I think it was down to about 25 last week. So, but pre sort of coronavirus or whatever we're calling this period, it was sort of under 20. So we're not far off. It's a little bit lumpier, but I think until things start to sort of work themselves out, there'll probably, as sort of government schemes come to an end, there'll probably be a bit more volatility, and then the market will adjust. But there's opportunities in both safe assets and assets that have taken a bit of a battering. So some clients are choosing to phase money in. That's entirely sensible. But equally, if you're around for a long time and not trying to make a quick buck from this week to next, then cash is cash is just going to hurt you more probably than it has done in the past. Maybe not this week to September or November, but I think over the next 2 or 3 years, asset prices are going to be pushed up because of all this government spending.
Yeah. Inflation has come down, but obviously with all this printing going on, as you say, 2-3 years, it's going to be troublesome for cash holders.
So I think that's me for this week. How about you?
Yeah, no, I think that's pretty much it. More sideways action, to be honest. And hopefully next week we'll be joined by Henry if he isn't on holiday again. I think 2 weeks back at work was too much for him, maybe.
I mean, he's getting old, isn't he? So got to get him plenty of rest. On that note, we'll speak to you next week, and thanks for tuning in. And if anyone wants us to cover any topics or anything they're thinking about or want us to talk about further, then please let us know. We'd be really interested to do it, and saves us a job of thinking about what to talk about each week. So more than happy to answer some questions.
Brilliant. Thanks so much for listening.
Take care. Bye.